Welcome back to the Global Ledger. I am Justin. Today we're stepping into one of the most important and I would say least understood pieces of the global financial system, and that's the Eurodollar system, the offshore dollar market that powers global credit, global trade, and global liquidity. This is not about the euro and not about Europe as well. It's about dollars created outside the United States, circulating across the world, funding corporations, funding governments and banks, all without ever passing through U.S. soil. If the global economy is a body, I would say that the Eurodollar system is the circulatory system. So pumping dollar liquidity everywhere. This is the episode where the world suddenly becomes one financial organism. Let's get into it. What exactly is a Eurodollar? Let's clarify the term first. A Eurodollar is simply a dollar deposit held outside the United States. That's it. If a bank, say in London, or Singapore or Tokyo, holds a US dollar deposit, that is a Eurodollar. These dollars are not printed by the Fed. They're not overseen by the FDIC, not onshore deposits, and not part of the traditional banking system. But they behave exactly like dollars because they're promises denominated in dollars. The key is this: dollars are not just a currency. They are a unit of account used globally for credit creation. And offshore banks can create dollar-denominated liabilities the same way U.S. banks create deposits. This is where the system gets really big. So the Eurodollar system creates offshore dollar credit. So Eurodollar banks operate exactly like U.S. banks. They make dollar loans. They create dollar deposits. They settle with offshore banks. They participate in global funding markets. They clear through correspondent banking networks. But they do not clear directly with the Fed. They clear through U.S. correspondent banks or even swap lines. This means that Eurodollars expand the global supply of dollar credit without the Fed ever touching the transaction. And this is how the world became dollarized. So why does the world need Eurodollars? Here's the thing. Global trade is priced in dollars. Global commodities are priced in dollars. Global shipping is priced in dollars. Cross-border loans are denominated in dollars. Derivatives use dollar collateral. Corporations, they borrow in dollars. Sovereign wealth funds save in dollars. So you can see the world needs dollars more than the U.S. economy. The U.S. economy creates them. So offshore banks supply the rest. So they create the dollar loans, deposits, liabilities, and liquidity. And this creates the global dollar system. And it is bigger, way bigger than the onshore system. Think of it as a parallel universe. The offshore dollar world has its own interest rates. This was the transition from LIBOR to SOFR. These are linked offshore rates. The offshore dollar has its own funding markets, dealer networks, repo markets, money markets, correspondent relationships, liquidity shortages, crisis, and so on and so forth. It really is a second dollar universe connected to the U.S. Only through, this is important, only through correspondent banks, treasuries, repo, derivatives, swap lines, and really a really important one is global central bank coordination. So the world really is one big dollar system. Onshore and offshore merge into a single unit. So how do those Eurodollars move? So Eurodollar transactions settle through a couple things, and I'll list five here. Correspondent banking. So to give you an example, a foreign bank holds an account at a U.S. bank. When they need reserves, they borrow onshore via their correspondent. So that's one. Number two, FX swaps. So a foreign bank swaps local currency for dollars overnight. This creates synthetic dollar funding. Number three, another example would be Eurodollar repo. So treasuries are used as collateral offshore to raise dollars, often with U.S. dealers involved directly. Number four, interbank loans. Banks lend Eurodollars to each other directly. And that's a very powerful one too. Number five, cross-border dealer networks. I would say would be one of the last ones I would mention. These are major dealers. This is J.P. Morgan, Citi, HSBC, Deutsche Bank. They intermediate the entire offshore system. So the key insight here is that Eurodollars don't need to cross borders physically. They move by adjusting balance sheets, just like onshore deposits. So let's talk about what a shortage looks like, and why crises look the same everywhere. This is really where the Eurodollar story becomes critical. When global funding conditions tighten, offshore banks lose access to dollar liquidity. Correspondent banks tighten balance sheet usage. Swap line costs rise. FX hedging becomes expensive. Treasury collateral would be another one. That becomes scarce. You'll see spike in repo rates. You'll see a widening of risk premiums. And global markets sell off simultaneously. And this is the global dollar shortage, and it's why crises propagate across continents pretty much instantly. It happened in 2008, 2011, the Eurozone crises, 2015-16, the China and emerging market squeeze, 2020, big one, COVID global dollar run, in 2022, say, the global tightening cycle. So the root cause is the same each time. The world is short dollars that, listen, only the Fed can ultimately supply. Which leads us to the next point. Why the Fed became the world's central bank. So during major global stresses, the Fed does something really extraordinary. It opens dollar swap lines to foreign central banks. This lets foreign central banks provide dollars to their own banking systems. When offshore markets freeze, say in 2008, 2020, and partially in 2022, 23, the Fed acted as the central bank of the global dollar system. Now, this wasn't by choice, but because no other institution can supply the high-level dollar money needed to settle global promises. The Eurodollar system relies on the Fed, even through even though it operates outside the U.S. So this is the political and financial reality of our time, and understanding it removes kind of the mystery of global crises. So when you understand this Eurodollar system, all these things like global sell-offs and dollar strengthening and swap line activations and liquidity cycles, they kind of start to make sense. Global liquidity cycles, I should say, start to make sense. Because at every level, the truth is the world is funded in dollars, and dollars are scarce during stress. So that's why the Eurodollar system is central to understanding anything about global finance. So I want to thank you for listening to episode 13 of the Global Ledger. We talked about the offshore dollar system, a quote shadow twin, you could say, of the U.S. financial system, but one that touches every corner of the global economy. So in episode 14, let's dive a little deeper into the mechanics. We're going to talk about FX swaps. This is kind of the hidden plumbing of global money. That one is going to connect every dot that we've laid down so far. So once again, I'm Justin, and thanks for being here.